But Apple, I think, is actually quite an opportunity. Me and Alex were arguing yesterday because he said Apple's dead. He said it's not even worth trading anymore. Basically, dead stock. I still have more hope in Apple. I don't think it's the best Mag 7 stock. I'm more of a meta guy, I would say at this point. But I still think that Apple, has some life, has such a strong, customer base that as soon as they develop something that is remotely interesting, it's going to have mass adoption. So anyway, I like Apple. I think the monthly chart is a very promising sign right now. And if you go to the income machine and you look at Apple, you could trade it. You could go for a longer term trade here, about 38 days, but this 24 days out opportunity caught my eye here. 20% with about 4.5% cushion on Apple. That means Apple could go down from 209, all the way down into the basically $199 range. You can see if you look at the profit matrix here, all the way down to 199, you're still basically at break even. So Apple can go down 4.5% and still make you money over the next couple of days. Here's the trade. I'll post it in there if you guys like it. It's given it to us at 418. I actually think you get in for a little bit better than that right now. So pretty good opportunity there if you just like some simple income. That one would pay 19.8%. Let me actually look at it real quick.
That is the monthly call, right? The 18th of July.
Yeah, let me look at what the mid price is actually showing here, because I think you might be able
to, a lot.
You might be able to get in.
My mid right now.
Okay.
I mean, the stock's moving higher at the moment.
So. Yeah, when I pulled it, we were only up, oh wow, it's up 2% now. Okay, we were only up 1.05% on the day, so it's moved up another full 1%. But I still like anything that can give you 18-20% with that kind of cushion. Should be pretty nice ROI, and I think Apple's it's found a pretty good base. If you look here, I think this 200 level, it's going to really try to fight and stay above. So anything you do, you could do a 199 or 195 200 call there, like we did on July 25th. But you could even go a little bit shorter time frame and pay 450. Doesn't sound like a great return, but you make 12% on a trade that over the next 2 weeks just doesn't fade back below $200. I think those defensive trades on Apple are in pretty good shape. So that's one that I like. More what I really like, if you want to flip this totally on its head, pick somewhere in this mid range, something like 225, and trade for it to get above that over the next several months. So this, again, these are monthly candles. So if you get a couple good months, that's what you're going to need to get back above that level. So you might need to give this trade to the end of the year. Maybe even go to January 2026 and trade 225, 230, give it, several monthly candles, and you can make a several 100% ROI. So trade it defensively. I think it's a good opportunity. Trade it aggressively with lots of time. I think it's a good opportunity. Similar to when we talked about Tesla, just not as extreme. I think the risk reward here on Apple is pretty good. If there's one stock that you want to rely on that when it gets down and beaten up over the course of 6 or 8 months, that it's going to have a pretty healthy recovery. Not a whole lot of stocks that have a better track record than Apple of doing exactly that.
Yeah, and keep in mind, guys, Apple is still $50 off of its high, which means we have a little over 20%. Wait, that's not right. 10%, 15% upside just on the stock alone. So that's really, really cool. Nate,
Yeah, I mean, 20%. We have 20%.
You're right. I don't know why I thought I did $25 in my head, but yeah, 20%.
Yeah, we have 20% over the upside,
right?
So
$40. No,
over $40
at this point.
Yeah, to basically 260, almost exactly 20%.
Yep. So. Nate, fun fact for you: do you know why Apple has been up the last 2 days?
No. Why has Apple been up?
Because of something that you predicted 2 years ago.
They do a buyout?
They are dumping their internal AI team and
just
made so far and looking to buy someone out.
Yeah. Well, to me, if you look at Apple and their track record over the decades, I actually wrote a whole report on this. I can dig it up. It's 2 years old at this point, but it's still very prevalent today if you guys want to check it out. I wrote an entire report about Apple and the fact that they're not really they don't really have a good track record of new ideas, which is very shocking to most people when they hear about Apple. They think of Apple as like an R&D company that comes out with new ideas. The track record of new ideas is actually very bad. What they're great at is marketing and redesigning older ideas and then launching them as if they're new. Like, for instance, they were way late on tablets. There are lots of tablets already totally out there in the market. You know, people had figured it out. The technology was there. Then Apple came out with the iPad and sold 50 times what everyone else does. Wireless headphones. I mean, Apple was so late to that game. It's astonishing. And yet AirPods are, monsters. Smartphone, obviously BlackBerry and others existed way before the iPhone came out. They came out and dominated. And the list goes on and on and on. So Apple really does not have a great track record of developing brand new ideas. They have a great track record of coming up with stuff that's already in the market, putting their marketing, their spin, their design on it, and then unleashing it to their crowd of loyal customers, of which I am one, and millions and millions are, especially in the U.S. And so that's what I expect on the AI department as well. As soon as AI started getting big, I said I highly doubt Apple is going to invent some new application for AI. They're most likely going to just use AI on their devices and their new tech or on their other technology, and then people are going to want their technology because it has the AI baked into it. So anyway, oh, by the way, Apple TV, not exactly a new idea. Just the list goes on and on.
Yeah. Gotta love Apple.
Yeah. Okay. So something else I want to show you guys. Da-da-dun-dun, da-da-dun-dun-dun-dun-dun. Okay. So we're working on something new. It's in the name, New Money Crew. You guys probably know me, Graham, and Lance do a lot of stuff together. We have a lot of similar ideas. We look at stocks fairly similarly. We also bounce ideas and do testing together and all that sort of stuff. And so we're building out this new thing called New Money Crew because, as you guys probably have noticed from Graham and I doing Opening Playbook every day, a lot of the scanners and stuff we've been building, we're really trying to increase our ability to provide free resources, free education, free content, free market updates, all that sort of stuff. Really just jam through more stuff that's easy to access, free, valuable resources. And so one of the things that we wanted to do was partner up in a more official capacity. Obviously, me and Graham are, quote unquote, partnered up every morning, but nothing in an official capacity. Same with Lance. We talk to Lance pretty much every day. And so we wanted to do something in a more official capacity that was going to be value forward. And so we invented this thing called New Money Crew, which is basically a brand, for lack of a better word, that's going to give us the ability to share ideas. And we'll do it in the form of a newsletter every day. Maybe some text messages with some stocks we like and things like that. And then we took a whole step further and we built a New Money Crew scanner. So this is something we've been working on in the background. And so this is the New Money Crew scanner for the day. It's giving you the top 3 New Money Crew stocks right there, top 3 stocks. Now you might be wondering, well, what the heck are the top 3 New Money Crew stocks? Well, what these are is these are rated based on the things that me, Graham, and Lance think are important. So if you look here, you'll see short and long-term trend. Well, that's a Nate specialty that I really like when the short and long-term trend are both up. Weekly momentum. That's a weekly momentum signal that the stock has to pass. Well, that's something me and Graham both do. Graham looks at weekly momentum in Apex. I look at an automated options. We both really like weekly charts and confirmation there. So that's baked into the indicator. Then you have seasonality. Well, that's a Graham specialty, right? Looking for a stock that meets the seasonal criteria. Well, that's baked into the scan. And then you have scanner itself. Well, that's coming directly off the things that Lance is pulling from institutional order flow. So what you have here is a scanner that bakes in me, Graham, and Lance's core criteria into one scan and then ranks it, as you can see here, with probabilities and scores, and gives you some of the best stocks that I personally think that you can look for opportunities and trade in a myriad of different ways. Now, obviously, today is kind of a unique day because Google, well, they both meet all the criteria because they both individually have separate order flows and things like that. even though, of course, they're essentially trading the same stock. And then you have Microsoft as well. So three technology stocks that are leading the pack, but this would update every day. And as part of the New Money Crew newsletter, you could see these opportunities. Now, this scanner represents my strategies, Graham's strategies, and Lance's strategies. And so, we typically would charge $9.95 or so for each. And so times three, you can get the scanner for $3,000. You just have, no, I'm just kidding. It's free. It's part of the New Money Crew thing, and we're actually going to give it away for free every day, or at least a snapshot of it for free every day as part of the New Money Crew kind of launch that we're doing, which is just, again, free. I mean, the whole New Money Crew idea is free. So what I want you guys to do is just keep an eye out for some updates, because we're going to launch this officially in the next couple of days, where you can actually get on the New Money Crew list, for lack of a better word, and you can actually start getting these top stocks, which I think if you track them, you'll find are some of the best opportunities out there. But it's just our way of doing two things. Number one, working together in a more official capacity, something that we wanted to do but haven't really had an outlet for doing. And so we launched New Money Crew to be able to do that. And then number two, just to really ramp up our ability to give you free resources. Obviously, Graham, Lance, and I all try to do as much kind of on the free side as we can, but we spend a lot of time on our services. We want people to be our customers. We make no apologies for that. We want you guys to be our customers. In fact, we want you all to be, all access, top of the line customers. But we really want to also expand our free universe, so to speak, of just wherever you're at in your journey, whether you're a customer of our services or not, that you're attending Opening Playbook and you're getting free value, that you're on the New Money Crew list and you're getting value, that you're on the New Money Crew text and you're getting our stock of the day, that you're on Graham and I, we're just Telegram, all of that kind of stuff, to really make sure that we're expanding that universe. So I'm droning on here, but my point is this is launching. It's just another way to give you free access to more ideas, more stocks, more analysis, more training. And as you keep your eye on your email, please pay attention to these three words, New Money Crew, because you're going to see some updates for that. You'll probably just take you a click of a button to get on the list and start receiving this. And then you'll get not just some ideas and some strategies, but some actual stock picks every day. So sorry, Graham, I took way more time on that than I planned, but pretty excited about this. I think it's going to be a big needle mover.
No, I think that's awesome. And I do think it's awesome that we're trying to give you guys as much free value as possible. We want this to be a cool little community where we can all come in every day and kind of go to war together in the stock market and have some fun, make some money. So we're doing everything we can to give you guys the tools that you need. So I'm really excited for it. Let me go ahead and share my screen here. Now today, we have the usual Tuesday market outlook coming up. If you guys, we haven't hit yet, but if you're in my Telegram, did anyone here? Is everyone here in Telegram? I posted this in Telegram. Here, let me go to this view. Here's a view where we get the confirmation. If you look down here, XSP and SPY, both breaking out today. Got the buy call signal here. We're at about 9:50 a.m. Everybody get that? If you did not get that, because you're not in Telegram, please let me know. I will share my Telegram link. We are working on ironing out the process for this. I want to make sure that you guys have the option selection in with plenty of time before we get a buy or sell signal. That way you can have them ready to go. And then the second you see buy calls, you can just press go and you're done. Versus right now, I'm just throwing it in there as fast as I can. So we're working on processes to make this very, very smooth for you guys so that you can take advantage of this trade every single morning. Again, I guess it doesn't happen every single morning, but usually it's always up to 5 times per week. And it's honestly kind of rare where we don't get an entry signal. And it's been working out this year with 86% accuracy so far in both directions. So Nate, I'm really excited about that. But if you aren't in Telegram, I see we have a lot of people said they do not have the link. I will post that here, and I will continue to share some of these trades with you guys. Again, we are polishing up the final details, trying to make it as easy to use for you guys. Right now, like this morning, you kind of had to rush to get in because we didn't have that process in place yet, but that's why I'm doing this with you guys, so I can get your feedback and we can make this as awesome as possible. But right now, that trade's up about 20% this morning, going for that 50% target. all automated for you. Uh, so that's my little spiel there. Overnight options is filled. Nice job, Chad. Nice job, Nate, on the overnight options winner.
Yeah, just dinged a second ago. I don't know if you guys heard it in the background, but we'll
I
take it.
love it. I love it. As a reminder, guys, this week is the 4th of July, maybe my favorite holiday of the year, at least one of them. Half day on Thursday, that's July 3rd. Markets close at 1 p.m., I believe. Let me double check that. Yeah, close at 1 p.m. Eastern, and then we're closed all day Friday. So we'll have the opening playbook session on Thursday morning. However, Friday morning, we're off. My buddies and I are going to go do the Murph and then go enjoy the rest of the 4th of July together. So pray for me on that Murph where you have to run a bunch and do a bunch of different exercises. And I'm probably the most out of shape out of my
What is a
buddies.
Murph?
It's a thing that there was and I don't totally want to botch this, but someone in the Army or Navy SEALs created a workout. I believe it's for Memorial Day normally. That people typically do it. My buddies love doing it on 4th of July for some reason, so I told them I'd join them this year. The real Murph is like you run 2 miles, do 500 pull-ups, 300 squats, 200 push-ups, I don't know, and then run another 2 miles. We're doing the half version because we're weak. There we go. Sin posted a
Okay,
CrossFit workout
Cynthia
named
got us.
in honor of Navy Lieutenant Michael Murphy, who died in Afghanistan.
Wow. Okay. Well, that what you just named there with the push-ups and the pull-ups would constitute more than I've done so far in my entire life from birth. So I can't imagine doing that in one day.
Oh, it'll be fun. It'll be fun. But 4th of July is going to be a fun one. Telegram of the week again. I just posted this link in Telegram. I did give you guys a new entry today. We are currently up. We have not hit our target yet, but I am testing out this 60-minute income strategy. And so far, 4 for 5 on the shared trades. We're in our sixth right now. Should have been 5 for 5, Nate. If you guys were at the class last week, I walked you through the little price discrepancy we noticed in the SPX or the XSP and the SPY that should eliminate some of those false signals. So really should have been 5 for 5 for you guys, but I'll keep heating that up in Telegram for you guys. See, if you don't remember, target being posted is that a set thing? It's always 50%. So if you get filled for 50 cents, it would be 75 cents, if that makes sense. If you got filled for 60 cents, it would be 90 cents. Yep, no problem. Opening playbook here, some of the current trades I took this morning. Keep in mind, sometimes, I don't know if this coin one is overpriced. Sometimes when you're weighing the money on a spread, it'll show above the total value. But so far, so good. Cruising right along here. Uh, Loving the trades that we're doing together. It's nice to see when they're working out. I know we did have a couple weeks at Chop where it was kind of a mixed bag, but nice to see they're coming back together. So for our morning market update, and I should probably, well, actually, we're about here right now. Markets are mostly flat. We opened slightly down. We did fill that gap already this morning, but still just flat and chopping around. And I think that makes sense. And you'll see why here in a moment. Gold is ticking higher at the moment, and Bitcoin is lagging behind after showing some sparks and some energy over the last few days. It's back to chopping. We'll see if it can break above from here. As far as reports for this week, we do have a pretty busy week. Powell spoke this morning. He may be still speaking or wrapping up. And then we did have the manufacturing data come out, which was positive, and good. The markets liked it. They jumped immediately on the news. That's actually where we got our entry, was right around that time. And then jumped up and then kind of cooled off from there. Coming up this week, again, half day on Thursday, full day off on Friday. Still, we have reports on Thursday morning, unemployment rate and jobless claims being the two biggest ones. Now, this is interesting. For next week, I think this is the first time I've seen this. There's only one economic report posted for next week that I saw on investing.com. Normally, like you'll get at least 5 to 10. Only one next week. It's on Thursday morning, jobless claims, which is a pretty normal standard report. It can move the markets, but typically not too much unless it's a drastic number. For the charts of the week, got a couple for you guys to chew on. This is a chart that we've looked at a few times here in the opening playbook. It shows basically the rise of the dot-com bubble. So the 5 years going into that market melt up, that crazy NASDAQ surge, where it went up 450% during that period. And then we overlaid it with the launch of ChatGPT, which was in November of 2022. So that's the start here. And then this red line is just the NASDAQ during that time frame so far. And it is wild, absolutely wild to see how closely this has lined up. For me, this means that, even though a lot of people are saying this is, we're at the peaks, This isn't sustainable. Well, I think that we do have a melt up coming up in front of us over the next, I don't know how long actually, but at least over the next year or so. But it's not going to be straight up. There's going to be rocky periods in between, just like there was during the tech melt up of the late 1990s. But with that said, look at the upside here based on what happened previously. And I think that this one may be, um, uh, I think this one's going to avoid the crazy complete dump on the other side. But I do think that we will get a bigger, larger, probably recession at some point, but there's still a lot of upside ahead if you're looking at that. Also, this is a good old chart that we've been looking at a little bit here and there over the last couple of months because it's interesting to see how the global money supply, the global liquidity tends to predict where Bitcoin goes next. So what you're seeing here, this green line is the M2 global liquidity, and then it's just shifted forward 3 months. And when you do that, it almost always lines up with Bitcoin. It actually lines up with the markets too a lot of the time. But here's just Bitcoin. This blue line is Bitcoin right now. So if we're using this 3 month shifted lead for the money supply, it's saying that money that should flood into Bitcoin and Bitcoin should go higher from here, which has happened over and over again in the past. So it'll be interesting to see what happens. However, Bitcoin right now seems to be more of a patient trade until we get a break above and some momentum really going. We are, you can see this blue line kind of, but just chopping out like we saw last year a little bit. But it's always interesting to see that money supply picking back up while everyone's talking about inflation cooling off. We'll see what happens. I saw this chart the other day on LinkedIn. I thought it was pretty cool. It was a Warren Buffett quote that basically talks about share buybacks. So the math isn't complicated. When share count goes down, so companies, when they do buybacks and buyback shares, take them off the public market, your interest in the business should go up. Every small bit helps if repurchases are made at value accretive prices. So if we're looking here, here's some tickers that have been doing some buybacks. Apple is obviously the one that's always in the news. It's probably been a reason why it's been so strong, even without the recent tech breakthroughs. But here's just a couple of tickers if you want to screenshot them to keep in mind. I didn't know about all these tickers doing all these buybacks, but it is always an interesting. It's almost an artificial pump to the stock, if you will, but it also does make sense in terms of just supply and demand. If there's less supply, demand stays the same, price goes up.
Yeah, it's definitely one of the reasons Apple has had the track record that it's had. It's continually done that, and just like you said, it's essentially artificially making the shares more valuable. Buybacks are one of those things that you almost can't argue with. Like it's basically a company's way to manipulate the stock because if you say there's 1,000 shares available, each one's worth $50, and there's 800 shares available the next day, like you almost can't say, well, now those shares aren't worth 10% more. So Apple's been the king of that. And when I was going through, Jack and I actually were doing a little bit of study on Apple a couple of years ago. It was crazy to see that the buybacks had way more impact on the stock than the iPhone releases or really anything else.
Yeah, definitely interesting. So there's just a little short list of tickers that you probably buy on any breakout because they have that artificial extra help there. And then this was another one. We've seen 4 months in a row of lower than expected CPI, which is good overall for the inflation data, good for potential cuts coming. My personal opinion is we shouldn't rush cuts, but we'll see what happens. They're starting to price in more and more cuts in the coming meetings. And then also next year, we'll have a new Fed chairman when Powell's term is up. So that'll be extra interesting to keep our eyes on next April or so. We'll cover that then as well. For the market overview in the last class, I told you the July heat is coming up, and it was way hotter than I expected. You can see my arrow there. Thought we get a nice grind higher to all-time highs, and bam, it went crazy. Got all-time highs in June before July. Today's July 1st, so got all-time highs in June, which I said back in April, and then pulled it back 2 weeks ago, and then now I wish I would have just stuck to my guns. But hey, July heat is here. And also, if you check it out, we have a golden cross here with the 50-day moving average going above the 200-day moving average, which is typically a good bullish sign for the markets, just technically speaking. It doesn't include any macro stuff that's going on and unfolding right now. But where do we go from here? If we look at the CNN internals fear and greed index, right now, the market has shifted back to greed. It was at neutral last week, but we are back to greed. However, even at all-time highs, we are not even near extreme greed. I'll see what it's at today, see if it's changed at all. Still at 66. So we are not overextended on as far as this looks. And I'll post the website in here. It is CNN, but it just looks at market internals and gives a rating. It's not like an opinion or anything. So I know not everyone loves CNN, but I think this is pretty unbiased in the sense that it's just averaging market internals. They take in one, two, three, four, five, six, seven indicators to give you a rating here. Posted that in the chat. It's a cool little tool to look at. If we're looking at the put to call ratio, which just tells us the options traders, are they more bullish or bearish? Right now, the bulls are in control, and we are leaning towards where we are getting near the overextended levels, but typically I want to see it below 0.75 before I say we're overextended. So you can see here back in May, February, going into the market, the real market peak there, I want to see it below 0.75. So we are nearing overextended, but it's not necessarily the peak of the market, and we could easily rebound here before seeing overextended levels. If we look at the percentage of stocks above the 50-day moving average, here's something really interesting. While the markets went to all-time highs, S&P went to all-time highs, the number of stocks above their 50-day moving average did not hit new highs, or at least not recent highs, which is interesting to see. What that means is that not all stocks are participating in the rally. In fact, it means most likely that the large cap stocks are dragging up the S&P 500, which has been a tale old as time over the last few years. If you waited for the RSP, which I'll show you here, which is the equal weighted SPY, if you waited for that to look good to buy the markets, you would have probably still been on the sidelines to this day. I just don't think that's the world we live in right now where every stock is going to go up together. We live in the world where the weighted stocks that typically do the best gain more and more market share as we go. So this isn't overly concerning to me, but it is something to keep in mind that not every single stock out there is a buy right now. However, the stocks trading above their 200-day moving average, you can see here, it has been trending higher. So this is good just to see that overall, we are getting to about half of stocks above their 200-day moving average, want to be above 60 or at least in that 60 range typically. So we are getting back towards that healthy number with full market participation, but we're not there yet, right? Just not there yet. RSP is not at all-time highs. Again, this just takes every single stock in the S&P 500 and weights it equally so that Nvidia is worth the same as, I don't know, Kroger, which obviously Nvidia is about 100 times the size of Kroger. I'm probably not right. It's probably 20 times the size, but weights them equally. And if you're looking at the S&P that way, not at all-time highs yet, but we are gaining steam, which is getting healthy. Seasonally speaking, and I need to adjust this because we are officially out of June. We have July here, which tends to be one of the only bullish months in the summer. August, September coming up, which tend to be choppy. But if we break it down bi-weekly, first half of July, I've been telling you this, is typically the best time to be long stocks of the entire year. So if we break down the entire year by every 2 weeks, first half of July is the best. Second half of July is also pretty good, right there in the middle of the pack, both positive. If we're looking at presidential seasonality, July is also pretty good. You can see here a little rocky start typically for a new president or a new term, which would be this year's seasonality. But overall, July is an up month on both fronts. Now, my upcoming prediction might, I don't know if it's going to shock you, but I'm not predicting the stock market to go straight up from here for the next 2 weeks. Because if you do look at some of these internals, we are getting near overextended levels. The RSI, which is just a very basic indicator, but every time it peaks above that 70 number, actually, I could put one here too, an arrow over here. We typically get a cool off phase that falls. And notice I'm not saying we don't always get a massive pullback or anything like that. We're not always getting a 10% correction, but just a good, healthy cool off phase for about a week or so. So you can see that here, barely peaked above 70, cool off phase. Here, peaked above 70, cool off phase. Peaked above 70, cool off phase. Here, peaked above, same thing over and over again. We're back here above that 70 number on the 10-day RSI. We also have CPC reaching a little bit. It's not quite overextended, but right now, the way I see it, I think we should see a healthy cool off, even if it's a sideways chop for a week or so. And then I think we're going higher from there. Then I think we're going to see that July seasonality kick in. But we really do just need a quick, it doesn't have to be long, but just a quick couple of days of a healthy chop around, which we like even today. Today's a perfect day, in my opinion. If the market sees a couple of those, it's not the end of the world. It's just going to allow the bulls to regain their breath and take off yet again. So again, it's kind of something like this. I've highlighted here just a couple days of chop and then back to higher from there. That is what I see for the markets over the next coming weeks ahead. So make sure to position size accordingly. For earnings, big week of earnings ahead. We've got pretty much nothing on the earnings board, but it is the calm before the storm because earnings season is going to start heating up again, I believe, next week. So check back next week and we'll see what's coming up for earnings. But this week, a very quiet week for earnings. As far as the sectors go, we review this every week. We've been looking forward to July for a while now. July's finally here. And some of the strongest seasonal sectors are infotech, which is technology, financials, industrials, and communications, which also have been the ones that we've been trading a lot and I've been really liking. So here was our sector ranking last class, our power ranking, if you will, technology up on top after it slingshot way up. And then down here at the bottom, we've been seeing these chumps down here for a while. Week over week, there was nothing crazy as far as no sector moved 3, 4 slots. However, something did happen that really grabbed my eye. Finally, it's been over a year now since Bitcoin has been just reigning at the top, and Bitcoin isn't really a sector. I just keep it in there just to compare it. But tech has finally taken over Bitcoin for the 6 month average seasonality or average strength. So now we've seen tech jump to the top spot up there, Bitcoin take number two, which again, I don't think we've seen that happen in over a year. So here's our top sectors right now that we're trading, and I'm going to stay the course, kicking discretionary out. It's just been too weak with the tariffs and China news and all of that good stuff. So sticking with technology, communications, industrials, financials, those ones I just highlighted for seasonality, those are going to be the main sectors we want to focus on. Now, for tradable opportunities this week, jumping into the nitty gritty. For the top apex signal of the week, I pulled this yesterday. We actually have Apple as well today. I'll give you that. But right now, let me get my handy dandy trade sheet up. Opening playbook trade sheet. For you guys who don't know, I do post these picks in the trade sheet. And Nate, by the way, you should add that Apple pick in there too. I got to stay on top of you. For this week, Microsoft looks really good. As you can see, this is a weekly candle. So like Nate mentioned at the beginning, we like to look at weekly momentum, weekly price action. Right now, Apple is breaking higher. This is an apex entry. And let me just give you some more fun information on this. Obviously, you can see the target price there at 520, stop price at 426. And let me pull up my handy dandy cheat sheet here. When Microsoft gets an entry, like it does here, it normally hits the profit target 89% of the time with an average return of 3.2% on the stock. And that's about a 7 week hold time. I'm posting that here in the chat for you guys who are curious, which means we can enter with a pretty great deal of confidence. Even if we get some chop this week, again, this is a 7 week hold time. We're 1 week in. So I'm going to look to trade some August positions on this, which will give us that full 7 weeks of markets to hopefully sizzle higher. Let me pull this up here. If you want to trade basic calls, which I get a lot of questions about trading basic calls, you absolutely can. They're going to be stinking expensive and you're going to pay for time decay. If I were to trade the basic calls, I would be looking for the 19th of September because, again, we're going to hold this for a few weeks. 500 strike calls is at the money. And if you look at the price here, $2,035 per contract. That's up to you guys if you want to do that. We also have a good note here from Ron. Earnings are July 29th. So if you want to sell before earnings, that's definitely a good idea if you don't want to pay for the implied volatility, which, by the way, it's not actually pricing in much implied volatility here, which is interesting. Obviously, before earnings, it wouldn't, but even these later ones, but it's probably because they're so expensive already. So if you want to trade the calls, feel free. This is a $2,000 contract. I'm not going to do that. I'm going to trade for the 15th of August expiration. And let me just check some prices and tell you how I would do it. Again, this might be a little inflated because as Ron mentioned, it's going to price in earnings as well. We'll jump back here to July 18th and take a look as well. Yeah, July 18th is much better priced. Let me go ahead and take a look. So July 18th will get us out right before earnings. Is there a, let's see what the volume looks like on the one right before earnings. Good volume. All right, this looks good to me. You're basically going to make a bet that Microsoft gains about 2% from here, a little less than 2% over the next 4 weeks. Again, July typically is the strongest month in the stock market. We know tech typically leads the way there. So what we can do here is take a quick simple trade, in my opinion, simple, just a debit spread on Microsoft. Not only are we not going to pay 2,000 bucks a contract, but we're going to have an opportunity to make a little over 100% return on investment if Microsoft gains about 2% from here. So let me type this up for you guys. I'll post it in the chat, but just give me a minute. Apex entry on Microsoft. We're going to look to buy to open, and Ron, to your point, this should avoid earnings for us. 25 July 2025 expiration. I'm going to buy the 500 call, and then I'm going to sell the 505 call. Again, we need Microsoft to close above 505 over the next 4 weeks for us to hit our max profit. You can set a target on this if you want. It's trading at 230. Our max profit here is the difference of our strikes, 505 and 500. The most we can sell it for is $5. We're paying 228 to enter, so let's go ahead and divide. Actually, we'll subtract that out. That'll give us our max profits 272 on 228 entry, 119% ROI. If Microsoft gains about 2% from here during the most bullish time in the stock market and an apex entry. So let me go ahead and post this in the chat. If you want to use a profit target, some of you guys like to use like a 50% profit target. Well, let's just take that 230 entry and multiply it by 1.5. That's going to give us a 50% increase. So your profit target there would be 345 if you want to do a 50% auto target, which isn't a bad idea because we know markets can go up and then drop out of nowhere. So I'm going to go ahead and place this one. I'm going to do two. I'm going to set one with the profit target and then do one without it. We can compare the results. Bump this up a bit. So filled right away at 225, so a little bit better than what I shared with you there in the chat. And then what you can do is I can go down here to Microsoft, right click, create closing order, and I'm just going to set a profit target again at 345, which will be a little bit more than 50% since I got filled for 225. But I'm going to set that to a 345 credit limit order. And I'm going to set it GTC, which means good till canceled. It will just stay open until that target is hit or the option expires. Let me confirm and send that. So now my profit target is set and it'll just sit open in my account until that's hit. Any questions there before moving on? I did post that in the trade sheet. Again, if you want Apple as well, it is currently a perfect Apple entry or right at it for us. Technically, we need it at 209.24, which it just was. We'll see what we can get, but it's also an Apex entry with the profit target price of 218, stop price of 179. So let me go ahead and add this to the deck just so you guys can have it for the recording. Whoops. And hopefully this is the Apple rally that we've been waiting for because Apple, and that is not it. Apple has been a dud for us for a while. We've been waiting and waiting and waiting patiently for Apple to make a move. And now finally looks like it is. So this will be in the Opening Playbook members portal as well for you guys to go back and review if you want to. All right, moving on for the hot sheet pick of the week. And this is one that's on the calendar. It's probably not my favorite buy right now, but I did want to share with you. It's Amazon, which has been a solid stock on the recovery. Here's a chart of Amazon. Oh, actually, I got one right here. It's been a solid stock, but it's not at all-time highs. So when we talk about not every stock participating in the S&P hitting all-time highs, Amazon, which is a large mega cap stock, actually is one of those. However, it does have a short bullish window of opportunity starting today, ending July 9th, where it's gone up every year during that date range and gained about 3.5%. So if you want to trade this again, I would personally look for small size. It's not my favorite trade ever, but if you do want to trade it again, we're looking for a July 9th expiration. It typically moves about 3%, which is about $7 from here. So that would put the price at 226. So if you want to go for a max gain, you could look at the 222.5, 225 calls. And that's going to give you a pretty large target if Amazon does make that move. Where did my calculator? Oh, there it is. 2.5 divided by 84, 197% return on investment. I would probably play it one strike safer. Should still give you a great result if Amazon does make a bullish move over the seasonality period. So we got hot sheet entry. Ticker is Amazon. But again, we don't need that full 3.5% move here. We only need about 1% from here to hit a little over 100% ROI. I'll type it up for you here and post it in the chat. 11th of July, 220 call, and we're going to sell the 11th of July, 222.5 call. Again, if you want to just trade basic calls, I'd probably go out to July or to August, excuse me, and just buy the at the money call option, which is trading for $1,000. But let me go ahead and share this one, which I prefer to do these spreads where we can get in for $100 instead of 1,000. So I'll just call it 110. It's 106 now, but I'll say 110. Again, our max selling value is the difference of the spread, 2.5. We're buying it for one, I'm going to call it 110. So we can get 127% return on investment if Amazon gains about 1% from here. Actually, about 2%. Well, let's see, $2, $3.50 from here. So about 1.5% move over the next 2 weeks. If you want to set a good till cancel target, again, you would just increase the price by 50%. So you can set it at 165, which really isn't that big of a move here for a 50% auto target on Amazon. There you go. That is there in the chat. Trading at 106 now. I'm going to do the same thing. I'm going to get two of these and then set one for the auto target once it fills. All right. Moving on, moving on. All right. Amazon filled right away at 107. For the Newton momentum picks of the week, which are our momentum breakouts, I'm going to pull up the scanner here and just see what's popping up today. This is going to be the ones that just had a new entry today, which are probably, well, I was going to say there probably won't be many, but looks like there's a ton. But again, we want to trade a good looking chart and a good looking sector, which I don't think there's going to be many picks this week simply because the markets did make all-time highs. So all of those stocks that are good that we want to trade probably fired entries over the last week or two. So right now we're just going to get the bottom feeders by the looks of it. But I do have one pick for you, so don't worry. This is just for new entries today. None of these charts look good. T-Mobile might be a good one for a rebound play. Wow, that's actually made quite a comeback here. Definitely write down T-Mobile. This one's in the communication sector, which has been strong for us. And it was a great stock and then had that pullback, but it is breaking above the 200-day moving average. Seasonally strong for the stock, and it did just flip positive on Newton. Let's look at the last time it did that here. Chopped and loser. Time before that, though, entry here. Oops, excuse me, here, and went all the way to here. So it went from 230 to 260, roughly speaking, about 10%. Time before that, went from 205 to 235, roughly speaking, so a little over 10%. So we know this is one that can pay. So definitely take a look at T-Mobile this week. Oh, look at that. Apple just flipped positive. So we got Apple here on the scanner. The one I wanted to talk about today is good old Robinhood, which, wow, it's fading the gains this morning. But you can see here the Newton momentum. It never flipped. It's been green for a while. Flipped green here at 44 bucks. It's doubled since then. So it's up 100% on the stock, which is just nuts, mind-blowing. But you can see here, if we're just looking at the waves of the momentum, It makes peaks and valleys, peaks and valleys, peaks and valleys. It looks like it's trying to make another peak right now. So I personally think that you can trade. My personal opinion is that Robinhood's going to hit $100 here very soon, and I think that's a good. I mean, that's 6% on the stock, which is not out of the equation considering that it was at $99 today. So it's a pretty volatile stock, but it's been a really great one. And you can see it here pulling back right now with the rest of the markets. But that might be a good buying opportunity here. And maybe this is something too. Like I gave you my overall outlook. I think we should get some chop here over the next couple of days. Maybe this is one that you just add to your watch list and say, if we get that chop, if Hood does come back here to the $85, I think that's a great buy. I think it's going to hit 100 here very soon. So that would be about 15% gain there on Robinhood. I'll go ahead and pull up the downside scanner for fun just to see what's popping up today. I'm not dying to trade anything short right now, and I would not trade a stock that looks like this short either. Let's see. Oh, Palantir. It's just such a volatile stock. XOM would be the only one I'd look to short just because energy has been weak and momentum is flipping red. You can see it flipped red here and it dipped lower. Flipped red here, dipped lower. Something happened here, but that might have been the Iran conflict. Actually, no, that would not have been. That was way too soon. Not sure what happened here, but something bad happened there with Exxon. But you can see that typically trading this one to the downside has been good, as energy has been pretty bad. So that's one. XOM is one that you can trade to the downside if you would like to add a little downside protection play on your trade sheet. So any questions here so far? E-Trade says Amazon spread is 15 cents. It should not be. If it is, oops, where did that go? There we go. If it is, you should buy it for 15 cents, but I'll tell you what it is right now. It's at 112 right now, Catherine. 113. With that said, we did see Nvidia hit new all-time highs yesterday again, and the day before, and the day before, and the day before. So right now, we've been trading Nvidia on this breakout. It's making a nice little correction today. Looks like they had some news this morning. I do think that this is going to be a stock. We talk about tech being strong. We talk about July being broad market strong. I think that this is going to be a stock that's going to lead the pack the whole way. Nvidia, Microsoft, Meta have been the top dogs, and I think they will continue to be the top dogs. And so we do have a short week this week, but it does set us up for a unique opportunity to get a little extra time this week on Nvidia to play it for the next 150 give or take percent move in a week. So if you guys would like to trade Nvidia with me and you would like to target the next 150% move, we got one last week. We're currently in one right now, and then I'm going to trade it again next week because the momentum is positive. And we're going to trade this whole cycle up and up as a way it goes. Well, we are going to bring back a special video that I played for you guys about a month ago, actually 6 weeks ago on my birthday. So let's look at when this was. Last time I told you about this was right about here, and I said you got to buy Nvidia. It's going to all-time highs, and then it did. I'm telling it to you again today because we are getting this 3% pullback. I think this is an excellent opportunity. Maybe don't buy it today. Don't buy Nvidia today, but this week on Thursday, I am going to reevaluate our trade and see if we can go after another 150% move, give or take. Could be a little bigger, could be about 140, 160, somewhere in that range. And then we can just trade it week after week as tech continues to break out in July and the markets continue to move into strength mode. And I do think that we will see a melt up happen. Nvidia is going to be the top dog the whole way. So we will pull up that video now, Deanna, if you don't mind. And we're going to share that with you one more time. It was a 1-day class we had. We didn't share the recording. I don't even think